So what I usually start with is just what's happening in the market, current interest rates and such. So this little Mortgage News Daily, if you've been in any of my classes, I usually start here. Mortgage News Daily is the closest thing to kind of an impartial third party. It's not a specific bank. They're not looking to fish information, just inundate you with email. It's really just good, reliable information. So what this shows here over in the left-hand side, current mortgage interest rates. This is based on a survey. It says last updated 6/3, but this was like 8 in the morning. So this is pretty much where the market closed on Friday. And that is putting the 30-year fixed at about 7.11 and 15 years at about 6.65. So remember those numbers in a second here. And then just pulling up the chart here. Let's clear this up a little bit. So here's a 30-year fix. This is going back over the last 12 months, from June of last year to June of this year. And we've seen as low as about 6.6 as recent as February. We've seen as high as about 8.03. And believe it or not, some of the surveys were as high as 8.4%. So over the last 12 months, we've seen, 1.5%, over the last 8 months, a 1.5% swing. And here we are kind of right now settled in right in the middle there. We have seen a little bit of improvement here with interest rates even yet today. And hopefully there's a little bit more to come, but this is a big week because the job numbers comes out. So as a reminder, the Federal Reserve Board meeting, that's always a big one. That'll happen later this month as far as what can move interest rates. The second biggest mover for the most part these days is inflation reports, which start coming out again next week. And the third biggest mover is the jobs number. So there's a few jobs numbers coming out, but the first Friday of every month is always the big one, as far as the big one there Wall Street's looking at. So that's the big focus, but we did see a little improvement here today in the market. So, higher for longer. If anybody see Don driving down, the west side, the bumper stick on his car, pretty much higher for longer. That's been his mantra here for a bit. And actually, almost those words were literally quoted from one of the governors of the Federal Reserve Board last week. So, there's no one expecting interest rates to be 5.5% before the end of the year. There is still some. Probably the most optimistic see it maybe getting comfortably back into the sixes, maybe kind of nab 6.6, 6.4. And frankly, we'd all be happy with that. I'm happy. No one's excited doing cartwheels about a 7.11 or 6.99% interest rate, but compared to where we were, and oh, by the way, back when we were at 8.4%, the wheels were coming off and there were talks of being at 8.5 and 9%. Thankfully, that kind of cooled off a bit. So just a reminder, this is when all of a sudden forecasts said, oh, the Fed's going to drop interest rates between at least 3, probably 5 to 6 times in 2024. Here we are in June. That hasn't happened. And frankly, it's not going to happen. Maybe we get 1 or 2 drops before the end of the year. So this is kind of when, Fed's going to be just dropping interest rates right and left. Then reality set in going, not so fast. I guess that's not going to happen. And we're settling in right around 7. So the Federal Reserve funds rate is the same today as it was back here. So rates are going up and down based on nothing else but speculation. So again, if we're going to hang around, whether it's just over or just under 7%, I'd be happy. But Chris and DJ, anything you guys want to comment?
I think you summed it up.
He did. I think Sean was back when you see those rates in late April, early May, up above 7.5. They were again talking about rates jumping to 8, 8.5 again at that point in time.
And I felt like that was going to happen. Now here's a 5-year mark. Yeah, indeed. Here's the 5-year mark, and I will tell you, again, as I said, nobody's excited about interest rates. I am not hearing, and maybe it's because they don't, they're not even getting as far as calling me, but I'm not hearing people say, well, I'm not going to buy because interest rates are too high. I think reality has set in. Prices have gone up. They are what they are. Interest rates have gone up. They are what they are. If I'm going to buy a house, I'm going to buy a house. I'm not going to wait for rates to come down. We've seen this resurface a few times, but I apologize. I don't remember which realtor posted it, or Don, maybe it was you. What was this saying? I can't remember the year, so forgive me. I'm this horrible at misquoting, but in 1983 or 1974 or whatever, interest rates were 7.3%. If you decided at that point that you were going to wait to buy a house until rates went down, you would have had to wait 23 years.
Right.
So, not to say that I don't expect rates to go down for 23 years, but my point is just absolutely unpredictable. You never know what's around the corner.
You know, Sean, too, sometimes we get too wrapped up in talking about interest rates, which I know myself, I try not to talk about interest rates. I try to talk more about the ability to build wealth by owning real estate. Um, Real estate's just going to appreciate, and rent does not appreciate. The only person you're making money for when you rent is your landlord. So, and if that guy owns real estate, that should tell you that you should own real estate instead of renting from him. So, buy whenever you can and let that property go to work for you, make some money.
Yeah, all sorts of sayings say that the best time to buy is yesterday. The second best time is now. And then just for fun here, just because, you know, here's the big picture going back to when this started recording information, the early 80s, late 70s here, but good information and all just a little bit of perspective. And I'd much rather be doing real estate here than here, which by the way, I was doing real estate then too, but yeah, this market, while nobody's excited about it, it's much better than it was. So we'll take it. Cool. So I didn't want to get stuck too much on that, but yeah, just like Don said, we try not to talk about only interest rates, but it's like the weatherman not talking about the temperature outside. So definitely want to touch on it here. And in San Diego, I guess it doesn't matter, but in Cleveland, we see a little bit of everything. So just a reminder, our web pages. So Don, Chris, myself, we all have our own respective web pages. Great resources on here. And if you're looking to pull some information, like if you yourself are, trying to reissue blogs or send out some data, or some people have a newsletter, want to pull a little blurb, put it in the corner. We have just gobs and gobs of articles, pre-written articles that you can pull from. If you want a little, hey, quote from your local lender, feel free to give any of a buzz. And we have at least daily kind of a little, like, whether it's a stat of the day or just a program of the day. Follow any of us on Facebook, and you can, feel free to pull information and, tag it, call it your own, whatever. But just want to know that there's a tool for you out there. Okay. A reminder on a few things here, and I accidentally closed a few of my flyers here right before I logged on. So let me get duty. We mentioned this a few weeks back, but just a reminder that for just about all of our loan programs, any police officer, first responder, paramedic, automatically we're going to purchase a line of duty death benefit. Should something horrible happen where a first responder is killed dies in the line of duty, we will cover their mortgage for up to $525,000. It's eligible. There's only a few programs that's not eligible, like a few unique first-time homebuyer programs that we partner with outside companies for. But this one, as you may have heard me say before, Ron Lenhart, the owner of our company, is really, really focused on both veterans and first responders. Has been kind of, as I said, a soft spot in his heart for them. So really, really cool program. To my knowledge, there's no one else offering this. This is something it took literally years to put something like this together. This wasn't to go sign up for something that exists. It's something that had to be kind of created. So pretty darn cool. But Chris or DJ, anything you guys want to add on that?
No, it's just actually proud that we have something like this to offer. We hope we never have to use it.
Well said.
Yeah.
Renovation loans. I was gonna say show of hands, but mostly just I know Don and Chris, and don't know this one, but renovation loans. I'm curious if anybody on here has experience with renovation loans. We may or may not do a whole separate breakout on this, but we are, believe it or not, seeing more of these pop up than you might expect. So as you may know, that the downside with renovation loans is, they could take a little while. There's a lot of red tape with these programs. But really, you as a realtor, you're opening the door a few more times, maybe for some contractors to get in. There's really not a whole lot of more effort on your side. we have a loan officer on our team, Sandy Lutz. All she does is renovation loans. God help her, but that's all she does. She can't even, if her best friend wants to refinance or, cookie cutter a little slam dunk, 780 credit score, she's not allowed to do it. She has to only do it if it's a renovation. So pretty wild stuff. But we're closing these in about 60 days and sometimes a bit quicker. Where we're seeing these pop up are a lot of buyers who are, can't get out or can't find the home that they want to get into. So they're often either, upgrading the house they're in. And this is, not just new roof and all that. They're putting on additions, doubling square footage, things like that. Or of course, maybe they're settling on a home that they aren't excited to buy, but, they could put in the money and make it work as their own. And, every realtor, right now, everybody wants listings, but every now and then you come across that listing you're not so excited about. Market it with this. We could, put together some renovation flyers. Sorry, I didn't realize I had the.
Hey, Sean, another great time to use this product is, let's just use a first-time home buyer. That first-time home buyer that's struggling to get their offer accepted on a house that was just listed this morning that has 57 other offers on it. Maybe we need to go show that first-time home buyer houses that have been on the market for 7 to 14, 21 days and show them that putting flooring, paint, and new appliances will give that interior a whole new facelift. And that's a real easy, simple renovation loan that you can close probably a little closer in 60 days. But those are the houses that maybe we should be selling those first-time home buyers and letting them know that they can virtually walk into a new home with some new walls, new flooring, new carpet, new appliances, etc., to help them get that offer accepted.
Appliances too. I mean, this isn't just, don't think like major projects or even, kind of just total fixer uppers. I mean, you could put a lot of stuff in there. We have some energy efficient things. It's a home run. Don't be afraid of it. There's usually, if you find a realtor who's done renovation, seldom have they done just one. They don't think, oh God, that's awful, I'll never do it again. It becomes a niche of theirs. So that's my experience.
Hey guys, can I ask a question?
Please.
Sure.
Hey, this is Jill Brown. I've tried this angle a few times and it wasn't with you guys, sorry, but the problem seems to be finding contractors who will actually do this work. Do you guys have a list of referrals?
We do have a list available, but we don't kind of say they're referrals because we don't want to be on the hook if something goes awry. But I know Sandy, Sean, you may have knows, Sandy has provided me with a list of contractors in Northeast Ohio that have worked with CrossCountry Mortgage. We could supply you with that list. We're not recommending them. We're not saying they're great, they're bad, or other. But if Sandy gave me the list, that she's pretty much vouching for them.
Yeah, because for contractors, think of our relationship with the contractor. On the front end, we've got to chase them for just kind of the basic paperwork, show us their license, bond them, experience, etc. Then we have to get their contractor, the actual contract agreement and all of that. So frankly, they got to be pretty good with the paperwork. That gets them kind of approved with us on this one transaction. Well, and then of course, after the loan, house is closed, realtor is paid and out of it. I'm myself a loan officer. I'm out of it at that point. Sandy is still in it through the completion of this house. There's often up to 5 draws being made and sometimes just 2 draws being made to complete out the project. So that relationship goes well beyond that. So, when we say, hey, Sandy, do you have a name for, a couple of people in this area? She may have 10 people that she's working with right now. She might give 1 or 2 or 3, which mean they've passed her sort of high standard before she's going to ever say, yeah, I want to work with these people again. So just like Don said, we're not going to say, hey, call these people. There are people. We warrant their work or anything like that. It's more going to be, hey, we had great experience with some other buyers in this one, so give them a shot. So that's usually our flow.
Yeah,
all right, thanks.
These loans only go as well as the contractor filling out paperwork. If a contractor takes 1 hour at night to fill out the paperwork, it can go really, really well and really fast.
Yeah, my experience has just been through other lenders that everybody wants to sell this product and nobody wants to help, and no contractors want to touch it because they don't want the whole draw process and the paperwork. So thank you. I will reach out to Sandy and the
And
next
that's the
time I give it
difference
a
with
try.
Sandy. Sandy will jump on the phone with these people, and her staff will jump on the phone with these people and walk them through it.
Mhm.
Good. That might even be next time we're thinking about putting a one-off class. It probably makes sense to even Sandy in on it, so that's good. Cool. So some other just sort of current events. That's what I'm classifying this as. Homeowners insurance and property taxes. So homeowners insurance, we're hearing this nationwide about homeowners insurance prices going up. I saw some crazy statistic that 13 or it went from 13 to 17 or whatever states paid out more in claims than they actually made in revenue. So you have insurance companies that are upside down in a third of the country. Florida condos and getting insurance, what's crazy what's going on there. California, you have some of the biggest insurance companies saying, nah, we're not going to insure here anymore. And unfortunately, even what happens elsewhere in the country still impacts premiums here. Obviously not dollar for dollar, but we are seeing insurance prices go up, car insurance, homeowners insurance specifically. So why I mention that is, when we talk to a buyer and say, here's your monthly payment, homeowners insurance for the most part is included in there. And if homeowners insurance is 20 or 30 bucks more a month now than it was a year ago, some sellers feel that, or some buyers feel that. Property taxes also. Cuyahoga County, just a reminder for everybody, in July or August, every homeowner in Cuyahoga County is going to get a letter saying, hey, we think your house is now worth X amount of dollars. And, it doesn't say what it was worth before, but, if you haven't heard, property values have gone up in the past 6 years, all over in Cuyahoga County, especially. And you're going to see quite a bump in taxes. So with every customer that I'm working with and every customer I've done a loan for, going back to last year, I'm having a conversation about, hey, here's what your payment is. Taxes are in there. Taxes, will go up. So I'm kind of dreading next spring. That's a couple of months after the tax bills are being reissued, and homeowners are going to get notification that, hey, your mortgage payment went up. And it's kind of a double dip because let's just keep it simple. If my taxes are $2,400 a year and now they're $3,000, which that's a pretty realistic jump. Okay, my taxes are going up 50 bucks a month, but we didn't find this out until the bill came out. So we had to pay a bill that was $600 higher than forecasted. So now I'm $600 in the hole and I have to account for an extra 50 bucks a month. My payment just went up $100. And that's just, taxes will, for most, are considerably higher than that. So, weigh that out on a house that has 5,000 or 6,000 in taxes, or 12,000 or 14,000 in taxes. It's going to be a big one. So, my big thing is here moving forward is to do a constant PSA, a public service announcement that, hey, if you have a mortgage in Cuyahoga County, your taxes will almost guaranteed go up later this year. Set some money aside for that shortfall and be prepared when that payment goes up. So if you all are doing kind of, your outbound touches, especially this summer, try and time it with your July or August. We're talking about putting just a simple mailer out to everybody just so we can officially say, no, this is happening. And, here's what you should be doing. But so that's going to be a big one. Geauga County, their taxes adjusted last year, but Geauga County put in a cap saying, I don't know what the cap was, but saying, hey, no matter how your value goes, your taxes can only go up this much. The state, there's a bill with the state of Ohio that's possibly putting in place to limit it, but it's only if you're at a certain income level, if I'm not mistaken. So be very, very aware that's happening. But Chris and Don, anything you guys want to add on that?
Yeah, Medina County went through this last year, and the people were just in an uproar. There were some massive changes.
Yeah,
I'm just curious. This scenario you gave is about 25%, and you say you think that's realistic. Is that what you saw in the other counties over the last couple of years?
Well, I haven't watched. I don't think they've been quite as much, but I'll give you. I'm using this as my test case. Had a customer who closed last October in, I think it was Cleveland Heights University. I'm almost positive Cleveland Heights. and their taxes weren't supposed to adjust till this year, right? Well, they got a notice, an escrow analysis saying their payment, their mortgage payment, this is their mortgage payment, not their tax bill, was $2,200 and change. The county adjusted their value last year, and it hit on the tax bill that was due in January, February when it was due. And I don't remember exactly, I think it was $1,600, but that created a shortage. And of course, they have to make up for the difference. This buyer's payment went up $800. Now, we called customer service and they changed the shortfall from a 12-month repayment to a 36-month repayment. But this one was pretty substantial. And this did not, and when they called the county to complain, the county said, yeah, you know, this is legit. And oh, by the way, this will be happening again this summer because they bought the house after this tax valuation was put in. The seller didn't disclose this, which that's a whole nother conversation. But I think for most people, it's not going to be 20 or 30 bucks. I'm guessing triple digits monthly for a lot of people. Not everybody necessarily, but for a lot of people. I hope I'm wrong.
Now, keep in mind too, the lenders give these borrowers the ability to make up that shortfall, and then just have their payment increase accordingly, so that you're not getting double dipped. So if you have $500 shortfall or $600 shortfall, they could pay that all at once. Their payment will still increase, but not as heavily.
And everyone may be aware of this too. If a buyer's putting 20% down, they do not have to put their taxes and insurance with their mortgage payments. So if you have a customer who does not want to have it all folded in kind of a forced budget, they can absolutely do that on their own. There is sometimes a cost to do that by the lender, but you know, I wouldn't talk anybody out of doing, as long as they're prepared for that. Hey, you're gonna get 3 big bills a year, your homeowner's insurance plus 2 big tax bills. So just be prepared for that. I'm going to touch on, I remember before I said on the other page, I said, oops, hold on. Sorry. I have to keep the Zoom bar is always right in top of what I want to talk about. So remember I said, take note of the 15-year. We've got a fantastic, so the 15-year generally runs about 0.3%, sometimes as much as 0.5% below the 30-year fixed. So for a lot of customers, and I won't pull up an amortization table unless you want me to. I could totally nerd out on that, and Chris and Don will get into that as well. But if you want me to, if anybody wants me to do an amortization table, I will. But we have been extremely aggressive with our 20-year fixed. So 30-year fixed, let's just say today's 30-year fixed, just use round numbers, is at 7%. And a 15-year fixed is at 6.5%. That's a pretty significant drop. Well, all along, there's always a 20-year mortgage, and the 20-year mortgage has always been there, but barely worth looking at, because a 20-year mortgage often is the same interest rate as a 30, so there's no benefit, or about 0.1% difference. We're seeing that the 20-year fixed come in often 3/8 better than the 30-year fixed. In some cases, I've even had the 20-year better than the 15-year. I don't have an explanation why, other than CrossCountry, just for whatever reason, is loving 20-year fixed mortgages. So it's a little bit of a jump in payment, and you know what, maybe I will nerd out with an amortization schedule.
Well, it is eye-opening, Sean. When you look at the amount of money going to principal on a 30 right now, it's just sickening.
Yeah, hold on one second. I'm going to pull this up here real quick. One of the other byproducts of a 20-year fixed is if you're paying PMI, your PMI is discounted. So you have a much lower PMI. I'd say much, but it's not a small amount.
But it'll drop off sooner too.
What's that?
It'll drop off sooner too.
Yeah, good point. So here's my resource center mortgage calculators. How much will my mortgage be? Okay.
Again, these are on all of our web pages.
So I'm going to keep this real simple. Let's just take a $250 purchase. Let's say, just to keep it easy, $50,000 down. I'm just going to take out taxes, no HOA fees, no insurance, just for us to kind of look at the breakdown here. So a 30-year fix, let's go back to that generic scenario. At 7%, here's what we're looking at. Second. Okay. So why isn't this showing the way I wanted to?
Amortization schedule.
Oh, here we go. Thank you. Appreciate that. All right. So on this $200,000 mortgage, the payment is $1,331. A whopping $163 is going towards principal and $1,166 or towards interest. Now we scroll all the way down here. What am I looking at here? Payout schedule. Let's go back this way.
Are you trying to find lifetime interest?
Yeah. Ending balance, interest. Forgive me. I thought this used to pull it up here. I might just pull up my spreadsheet. All right. We'll go the nerd route here. Hold on a second.
A lot.
Apologize. What's that?
It's a lot.
Yeah.
Yeah.
348,772 on the 30-year at 7.
All right.
For a $250,000 or for $200,000 loan.
Yeah. Sorry, make that 279. I had a $250,000 loan.
But this way, because I'm going to switch it over to the 20-year for fun. Okay. $200,000 loan, 7%. Just do it this way. 279,000. So there you go, Chris. You nailed it. So $200,000 loan at 7%, you're paying $279,000 over the 30 years. Payment $1,330. Remember that. Let's switch this to a 20-year, and let's just say let's put the rate at 6.625%. $161,000. You just saved $118,000 in interest.
Yeah.
Your payment went up $175. Now, I don't push anybody into a higher payment, more or less. I'll throw this out and say, hey, in case you're looking at other options, you got a 15-year, a 20-year. But for $175, you get that lower interest rate and you're saving $118,000 per month, or excuse me, over the life of the loan. Huge, powerful number. Now, again, to a first-time home buyer who might be going from, hey, their rent's going from, $1,100 to now $1,500 plus tax insurance. This might be more than they want to, bite off. And I always tell anybody, if you're stressing, if you're going to put yourself in any amount of stress to jump to a 20-year, go with the 30-year. You can always make, extra payments. But this is a huge, powerful tool to save over the life of the loan. And going to a 15-year, not a bad idea, but that payment jumps up a lot more. You're paying, approximately $235 more just going from the 20 to the 15. So that going from the 30 to the 20, it's a jump, but 20 to a 15 is a big leap. So I like throwing that $20 one out there. Got a real cool experience from this morning. You've heard us talk about our Promise program. This is our $6,500 grant. So this first-time home buyer, they're putting 20% down, and I'm coming in and saying, hey, do you want $6,500? All you have to do is take this first-time home buyers class. Guess what they're saying? Yes, no problem, for a free home buyers course. Now, what we ended up chatting about were 30-year fixed mortgages, and they said, hey, do you have a 15-year? I said, I have a 15, but let's stop and take a look at the 20. Their interest rate or their loan amounts a little bit higher than this, but just use level numbers. So what they ended up doing is, let's say it was a $200,000 loan and we're quoting, let's say it was a little lower than 7%. Let's just say this was it's a different credit score items too, but 6.875%. We're giving them $6,500. They're taking 2 points, which in this example ends up being $4,000, and they're getting a 5.99%. I was so excited about this. I got off the phone with the buyers and I called Don and I said, these buyers are getting a 5.99%. And Don probably thought we missed something in the market. Did rates go down 1% overnight? No, they did not. But this is a real nice little niche with a 20-year fixed and getting handed $6,500 and paying 5.99%. Just look at the amount of interest they saved, roughly almost $30,000 using that free money we were giving them to take a lower interest rate. So Chris, I didn't have time to call you before the meeting. So yeah, there you go, 5.99. So 5 point anything, I'm doing cartwheels about, even more so when it's a fixed interest rate and there's no adjustable period. And yeah, they have to pay money to get it down, but they're not even using all of the $6,500 that we're handing to them. It just, these guys are, excited. I mean, they're excited to be under contract. They know how hard it is in this market, but wanted to make sure we touched on that.
Yeah, but the only reason you called me, Sean, was because I had already called you to wish you a happy birthday because it's Sean's birthday today.
Thank you. Appreciate that. All right. Well, I'm glad there's not more people on this one.
Happy birthday.
Thank you. Appreciate that. Yeah, it was my backwards way to get a happy birthday wish out of DJ. So for my birthday, I gave a buyer 5.99% interest rate. So it's crazy. Not too long ago, we thought 5.
You get a low rate, and you get a low rate, and you get a low rate.
Today only. So if you call,
right.
Have your buyers call today. Cool. So anybody have any questions or comments they wanted to add on the or any amortization scenarios they want me to run? No. I see there's something in the chat here.
Nothing there.
Nothing there.
All right. So speaking again of the Promise program, it's been a home run. So for those of you, I definitely talk about this. I think at each one of these, but we've got multiple different grants. If somebody's a first-time home buyer, makes below roughly 76,000 a year, it's a little higher than actually now the new limit.
77.2.
77.2 qualifying income. We'll give them a 2% grant up to $4,000 and a discounted interest rate. If they're coming from a, I don't know what we're going to call it,
demographic,
certain designated area. It doesn't matter where they're buying. They can be buying in Miami of Florida or Miami, Ohio for that bad. But if they end up coming from a particular community, we'll give them the $6,500. And this is all over, east side, west side, Elyria, Lorraine, partly get in there. A lot of eastern suburbs, city of Cleveland, some big chunks of that. Some areas you think might, qualify and others that don't. But so any customer I'm talking to, we run their address through kind of this little simulator that tell us if we've got that available. Then, of course, we have OFA. Now, let me go spend a minute on OFA real quick. So OFA is a state-funded bond program. They accumulate funds and come up with money for lenders who have a relationship with OFA, which, of course, we do, provide some great opportunities. So here is, check this out. You have a first-time home buyer who is a hero, meaning police officer, teacher, nurse, loan officer. Just kidding on that last part. I'm just out there for trying to get the laugh. So thanks, DJ. Look at this interest rate. 30-year fixed FHA rate at 5.75%. There are income limits, but they're up over 100,000 for most counties. They do have to take a home buyer's course and a little budgeting class, but it's easy. The costs are a little bit higher on a $200,000 house. The buyer's going to pay about $2,500 more in closing costs, but I'd say that's worth it for a 5.75% interest rate. Now you can also get grants. This isn't just for heroes. There's a conventional version as well. So you can get a grant, but with the grants come a little bit higher interest rates. The owner, I mentioned the closing costs. There's one other downside, and that is if you get the grant, it's what they call a forgivable grant, forgivable loan. So they give you the money. So on a $200,000 house, you're getting a 5% grant. You're given $10,000. Every year, 1/7 of that debt, of that balance, of that loan gets forgiven. So unfortunately, if you sell the house, if you move out, or if you refinance in say 2 years, you're going to have to pay back, whatever the math works out to be, $7,000 of that $10,000 grant. So that's a downside to it. But hey, if it's the difference between getting in and not getting in, perfect. Or if you've got the funds, hey, let's look at one of these. This isn't just first-time home buyers. They have there's some other, these rates aren't anything to write home about, but there are some other options out there, for these programs. And then there's MTC, which is a mortgage tax credit. This is basically where the buyer gets a certificate where when they file their taxes, they get a rebate or refund. I'm not sure the best word for it, but whatever their tax debt is in that given year, they get a portion of it back up to $2,000. Is it up to $2,000? EJ, do you remember? Forgot the limit, but it's basically free money. It costs $500 to get. There's no clawback. There's no strings attached. It's a great option. So that's OFA. OFA stands for, again, stating the obvious here, but Ohio Housing Finance Agency. They offer other services outside of this, but this is hands down the most common that part where you'll come across it. So, any questions or thoughts on that? No. Okay. Any other topics anybody wants us to touch on before we're done? I've got a few more things I was going to go through, but didn't know if anybody else had any questions. No. Do I want to get into NAR? I'm not 100% sure, but this is going to be, well, it's been an ongoing conversation for months and will continue to be. So I have had a few transactions where a buyer is essentially paying their agent's commission. These were kind of quasi for sale by owners or kind of quirky kind of listing. Wasn't your traditional Keller Williams listing, Howard Hanna listing, Remax, EXP. They were a little bit more outside the box and frankly, kind of using the current events and kind of angling things a little bit. But the important thing is if there's commission being paid on the buyer side, we have to know about it. I mean, yeah, that seems obvious. But, if there's something written between the buyer and the buyer's agent and it's not disclosed to us, we don't know that that's being mixed in there. And of course, if there's fees being paid by the buyer through the transaction, through the process, we have to know about that. So the early advisement that we've been giving is just, put it on the contract. So I had a scenario where a seller and buyer were kind of like splitting the buyer agent commission. So we just put a simple sentence on there of, buyer agent commission to be X amount of dollars, buyer paying X this amount, seller paying this amount, and that's it. So of course we put that amount on the buyer's cost worksheet and loan estimate. So those closing costs look like, oh, wait a second, closing costs $18,000. Well, yes, there's 10,000 commission and admin fee. So all those things get put in there, but we're starting to see that a little bit. The other part of this in negotiations that, and I, again, hesitate to get too deep into this because I think it's going to be sort of our delivery is going to be refined on this. But the good news is Fannie Mae, Freddie Mac, USDA, VA just recently announced kind of indirectly that buyers are allowed to pay commission, right? That's kind of when we kind of figured. But if the sellers pay the buyer's commission, it's not considered a concession. What I mean by that is on an FHA transaction, let's say $200,000, a seller is allowed to give a credit up to 4%, or in that example, up to $8,000. If the buyer's closing costs are $5,000 and the buyer's commission to the agent is $10,000 and the seller's paying that, that's okay. The commission is not counted as a concession. The $8,000 limit covers the $5,000 total cost, so we're okay there. As I say that out loud, I almost confuse myself, so I apologize if that's not clear, but I got to refine my delivery on that. But the good news is sellers paying a buyer's commission is not considered a concession. It's not going to limit other fees that the seller would be able to pay for the buyer. It's probably a better way to maybe put it. Don and Chris, anything you want to expand on for that?
No, short and sweet. Just know for VA, until VA comes out with what they call their VA circular, it's not in effect yet.
Good point. Good point.
It feels like all of this is somewhat, to be determined a little bit as well. But
this is 5 people at a poker table all trying to read each other bluffs, but nobody knows whose turn it is to start the deal or to check or raise. So I don't play poker all that much, so forgive me if I got that analogy off, but like my analogy. So So those are the most of the things that I had kind of on my checklist or, to-do list. Chris or Don, anything you guys think that's, timely to chat on?
No. Well, we had a big announcement today. I don't know if it's on social media yet, but Scotsman Guide just stated that CrossCountry Mortgage is the #1 retail lender in the country. That's a pretty big accomplishment for a company based out of Cleveland, Ohio.
Yeah.
I think as the story goes, we started with 6 people and we're up to over 7,000 now in what, about 15, 16, 17 years, and became #1 in the country.
Yeah, pretty wild. It's
pretty powerful. So I guess we're trying to say is you're partnered with the #1 lender in the country.
Yeah, pretty damn cool.
Yeah.
Yeah.
We're proud of it.
Good call on that, DJ. They're having a little party in corporate. DJ's going down for the hot dogs and desserts, and I'm not sure I'll be able to make it, but it's pretty big. And I've been Don and I have both been in this company for about 7 or 8 years. As I always tell people, when I started here, I remember they were like, "Hey, yeah, you and Carmen are like the 900th employee." They're like, "Man, look how big we're getting," and they're nearly 10 times that. CrossCountry Mortgage nationwide is financed 1 out of every 44 purchases. 320 loans per day. I'm just the statistics popping up under there, but really cool stuff. And obviously, growth. If historically going through the growth of this company, the owner of the company, Ron Lenhart, has really excelled during the toughest of years. And I would even say the last 24 months, 30, post COVID, had been I would say definitely a tough time in mortgage and real estate, depending on how you kind of measure things. But it's really cool to be a part of it all. So yeah, it's fun to be part of it, and we appreciate you all allowing us to be part of your business. But all right, well, I was gonna thinking of something else to say, but maybe that's a good way to close it. But anybody else have any other topics or any other things that they want to run by us while we're here?
If not, just call us, email us, text us. We're available.
If you're working, we're working. Don's 2 favorite things: if you're working, I'm working, and higher for longer.
Higher for longer.
And go Browns. Yeah. Although right now, go Trot. Well, go Guards. Go Guardians. It's
Yeah.
absolutely loving this. So I think we have some events later this month. I know we're going to have CrossCountry Mortgage and Ohio Real Title. The 3 of us in Ohio Real Title are going to do a little presentation more on NAR stuff. Or I keep saying NAR stuff. There's got to be a better way for that. But on the changing things, there's a happy hour organized through KW in I think on the 20th. So got to see plenty of you at the last happy hour for the Keller Cares, and we're just gonna keep that going through the summer. And then we'll be a sponsor for the Mastermind in July. So no doubt you'll see us there, as well as every Tuesday live or in Zoom. So yeah, that's all I got. Chris or DJ, anything else you want to add?
Good.
Okay.
Thanks for your time.
Yep.
Thank
Thanks
you.
everyone. Call us if you need us.